Hey folks, Dan Frio here with your Mortgage Minute, where we discuss everything real estate, especially when it comes to the financing options. So today, the only word out there is the Fed. So why are we considering, or why do we even care about the Fed? Well, did you see the stock market lately? Have you seen mortgage rates? Have you seen gas prices? Have you seen all kind of stuff just keep going up and up and up? Well, the Federal Reserve has two mandates. One mandate is full employment. The next mandate is price stability, or AKA inflation. So what they're trying to do right now is really put a squash on inflation. So how are they going to do that? Well, let's get over to the news and figure this out. So what the Fed's planning on doing is they're going to do something that they haven't done in over 28 years. So let's look at this. Here's everything the Fed is expected to announce, including the biggest rate hike in over 28 years. Well, let's go over what that is. They're expected to raise the federal funds rate by 0.75%. We call that 75 basis points. But the odd thing here is, ever since the last Fed meeting, all they've been telling us is they're going to increase rates by 50 basis points, all the way up even to last week. But then all of a sudden on Friday, the markets went into complete chaos. Stock market plummeted, mortgage rates spiked. That continued on to Monday. Mortgage rates spiked again, pushing up rates probably almost across the board, at least between 0.5% and 1 full percent in 2 business days. So did somebody know something that we all didn't know? Because what happened at that point is the markets all repriced themselves based on the new projection of what the Federal Reserve is going to do. So we're going to have a special report coming out today at 1. I'll be live to answer any on all questions that you have, but we're also going to have a special event at 3 o'clock Central Standard Time with realtors all over the country to give their input on what is this going to do to housing? And these are not only realtors, but they're also YouTube influencers. So let's get over to the news and some data that I think you'll find relative. Well, some good news that we just had announced, just coming hot off the presses, is U.S. retail sales fell 0.3% in May. You might not think that's a big to do, but let's go down through here. Excluding gas station sales, retail spending fell 0.7%. That is one big move. Is the economy starting to finally cool off? Because people have to allocate monies now to fuel that they would allocate in other areas. The only economic news we have today, and I say only because it's a laundry list, but not really. There's 3 main components to this. We have retail sales that came out. We have oil inventory, and then we got the Fed. So here's the retail sales numbers. The core retail sales, it shows that last reading was 0.4. The expectations were to be at 0.8, and it came in at 0.5, so lower than expected. Look at this number down here. The retail sales in general, they were expected to be, well, last month's was up 0.7. They were expected to come in at 0.2, so it decreased, starting to come back down. Would they come in at? They were actually negative 0.3. So that's another piece of the puzzle that's saying, is the economy cooling? We'll know more today from the Fed on what they plan on doing. So why did you come here? Well, mortgage rates. So here's where rates ended yesterday. They haven't priced in yet today, but I got some good news for you in the MBS market. So let's go over to the MBS market. What's going on right now? Well, usually, like I always say, the markets overreact. So now they're starting to come back saying, okay, everything's been priced in and maybe we overdid it a little bit. So what this number is right here is what's the mortgage-backed security, the bond that trades on Wall Street, what it's doing right now. Let's refresh it and see if there's any movement within the last couple minutes since we've been doing this. Oh, it's starting to retract a little bit. I wouldn't be surprised if this came all the way back to almost zero by about 1:30, 1:45. Why? At 2 o'clock, the Federal Reserve will be announcing what they did. So we usually have a rally in the morning, and then right before the Fed announces what they're going to do, things kind of taper off and stagnate until they actually announce their news. So we follow this because this is a bond that trades on Wall Street. That yield is the biggest component of your mortgage rate. So as this number goes up, mortgage rates are coming down. If you want to find out more about how that works, check out yesterday's video in the morning, the Mortgage Minute, on June 14th, and I explain that to you how that works. So we love when this number is positive. Why? Because that means mortgage rates are going lower. There's an inverse relationship. So let's go over to where mortgage rates ended yesterday, and none of this news or none of these figures have been added into this figure yet. Because why? This is a survey that Mortgage News Daily does from lenders all over the country. they haven't had time yet today to get all those surveys in. So they usually post around noon on where rates are. So this is basically where we closed yesterday, and you can see right through here. Basically, a consensus was they were up. So what I like to use this for, again, a lot of people ask me these questions, Dan, that rate, is that rate too high, or that's not my rate, or whatever. Let's extract this number out right now, okay? I'd like you to see this because if you look at like the 52-week high and low, look at, here's the low, 278, and the high, 6.28. A little bit of an increase, wouldn't you say? So what I'd like you to do is monitor these adjustments over here, okay? So let's say, for example, if you got a quote and your quote was for 6% and you didn't lock in, but now you see this is saying, well, mortgage rates on the 30-year fix are up probably 0.1%. So if you get a new quote from your lender, don't be surprised if your rate doesn't go up by 0.1. So we have the 30-year fixed here, 15-year, 30-year jumbo up 20 basis points. The 5/1 ARMs continuing to tick up at 20 basis points. And the government, the FHA and VA loans are flat. Right here you can see the trend for today is extremely positive. Did somebody leak some more data? We don't know, and we'll find that out about 2 o'clock. Trend for the 10-year trend right here, chart. We're in uncharted territories there. And like I said, the MBS market, let's check it one more time before we go. It's up 48, was up 55, we're up 44. So it's starting to retract, just like I said. So guys, this is your Mortgage Minute with Dan Frio. I hope you join us at 1 o'clock so I can answer any questions that you have. It's 1 o'clock Central Standard Time live, and then we'll be back at 3 o'clock Central Standard Time with realtors from all over the country to answer any questions that you guys have and figure out what their thoughts are now that the Federal Reserve came out. What do they think the housing market's going to react? So find out all that and more later this afternoon. But thank you so much for joining me. God bless. Have a great day. I'll see you later. Bye-bye.